if you see if you from 2017, 2018, the growth was very stagnant. Even until 2020, Corona came. Correct, no? If you see the NAV value 17, it fell down to again some 9 rupees or 12 rupees. So if you see here from 2008, 2017, 18, the growth hasn't been much. Correct. But see now, it has growth. I mean, it has moved at a very exponential rate. Okay, so what we can learn from here is these these can perform exceptionally good in good market, but it can perform exceptionally bad at very bad market also. If you see here from 20 what do you say 2020 to here, it went half. Okay, correct. Now we'll go and search some debt fund. See, I'll show you. You'll only understand. See, the returns on a fund. You're seeing 8%. Okay. Now we'll change this to equity fund just to understand. See, and you also see the fall here in debt fund. Okay. So you will understand how much of a fall has happened actually. What happened in 5 years? See, there was a small glitch when the market fell, very small. Correct? No. So what this says is it is very simple. It is debt funds are little better than FDs. Okay, that's why the people store here. I mean, yeah, park their money here, but they are safe. They are safe for only one reason. People only, I mean, the fund managers only invest in kind of companies. If you see, I want to show you here. Huh. So all this, these are again bonds. Okay, if you go and search sovereign bonds, metal bonds, financial bonds, all these are bonds, majorly bonds. Okay, so all this they have invested, and based on that they have returns. And here you'll not see very major investment. What I know, see there you saw 30%, 20% investment. Here you are seeing 8, 10%, 8%. So this is very diversified, and they try to keep it very safe. And if you see now we saw this, no, we'll go to hybrid one. So you'll understand the returns better. You saw 30, see, for equity it is 30%, for debt it was 8%. Okay. Now we'll go to hybrid. Again, mutual fund is for people who don't have time to spend on and who do not have knowledge. Okay. Yes, there are few things wherein you can make a good return. So I mean help out of it is this what is this? ELSS, equity tax saving ones. So that you can use. Apart from that, I do not. For me, I personally do not invest in this. I would prefer to go to any of the stocks and go and invest instead of just giving my money to other people decide where I have to invest my money. Depends again. Majorly, ELSS it is it's the name itself is equity. Uh, So again here in that also we have different one growth, uh, blue chip, large cap, small cap. So all these are again different sectors into look into. Blue chip is something from many years. If you have this company in the industry and performing really well, and every year they are giving good returns. So those are the stocks called as blue chip stocks. Large cap, small cap, mid cap. All these are different names based on the market capitalization which they have. Based on that, they are named large cap fund or mid cap fund mixed. So different things uh, which you can invest into. Apart from that, also there is very interesting thing which I think if you have heard of, if you did not, I mean, this you can consider as a homework for you guys for coming time for the next week or so. But then, just a minute, I think something mismatch. No, not this. Yeah. Huh. ಯಾವ್ದಿದು which one did I miss? Investor India. No, I think yes, Investor India only. So I think you will not be able to read this completely. If you are able to read, good. If no, then God bless me. Wait. Huh. So you see this as mutual fund barometer, correct? No, ULIP. This is called as ULIP. So find out what it is. I can explain, but find out what it is. There are something also called as now small case. They are very different. See, investing is so huge, no? So there are different things wherein you can invest in different ideas, different sectors. So what small case is? Again, it is a modified version of mutual fund, but with what do you say? Very niche ideas here. Find out what ULIP and small case is. If you don't get a proper idea, I would explain in the next class. But I would keep it as an homework for next class. There are many things to learn. For sure, there are many things to learn. It's all based on. See, for even saving tax apart from ELSS, we have something called as ETF. So this is, I mean, again, it is based on same idea. They take a Nifty 50 stocks, and based on that, they give the returns. But how I invest here is, wait, just a minute. I would 1 day. No, 1 day is too less. 1 month. See, even this has moved very drastically. Okay, so how I used to do it is, I mean, even now I do it for Salin's account. Okay, uh, so this is my whole idea. So whenever market falls, this will surely fall. So what is ETF? ETF is a combined traded fund. It is a equity traded fund. The name is equity traded fund. So it is a combination of it divided by some value, and then this value is derived. Okay. Now, what I do here is for investment. For example, whenever the market falls, and usually it closes at very low. Okay. When the closing is at red, I buy this around 315, and this is on usually every fall I used to do it. So what happens here is, whenever the market is falling, I'm buying, but then whenever market is going up, no, I'm not doing anything. Only for every red day, I'm trying to buy this.